Hello, good afternoon, everyone, and welcome to today's webinar about new VAT rules for trading with the EU, brought to you by the Institute of Export and International Trade in partnership with VAT specialist Avalara. My name is William Barnes-Graham, the Senior Content Editor at the Institute, and I will be your host for this afternoon, morning even. This is clearly a very important topic for many traders in the UK, especially following the introduction of the EU's new import one-stop shop earlier this summer. And it's great to see so many of you on the call today. We had over 650 sign up and we're over, coming up to 300 attendees on the line just now as well. So great to see you all. Welcome to you all. Next slide, please. Next slide. Thank you. Okay, there you go. Here you will see that we have three fantastic speakers today from both the Institute and Avalara. We'll shortly be hearing from our webinar regular in Kevin Shakespeare, the director of the Institute's Academy. And Kevin will be setting the scene, talking through some of the post-Brexit trade changes which have happened and considerations businesses need to be making. We'll then hear from Matt Harrison, a VAT specialist at Avalara, who will be talking you through the new IOSS and OSS schemes and some of the processes traders will need to be considering, including for consignments valued above and below 150 euros. And finally, we'll hear from Marcella Deegan, a cross-border solutions manager at Avalara, who will guide you through the duty and tax implications for trading with the EU. You can read more about our illustrious speakers on the slide on the screen at the moment, but while you're doing that, just a couple of quick housekeeping notes. Firstly, you can contact me with any comments or questions using the question panel on the control window to the right-hand side of your screen. We hope to get to a number of your questions towards the end of the webinar, though please bear in mind we have already received a lot of questions, so we'll not be able to get to everything today, but we'll try to do as much as we can. If you feel as though your question has not been answered, please do review our technical helpline or training and consultancy offerings, which we'll talk about later in the webinar. Secondly, you will receive access to today's slide pack and a recording of the webinar in a follow-up email we'll be sending before the end of the week. So please do try to listen in as carefully as you can to today's presentations. You will also see you can download the PDF of the slides and a one-pager about IOSS provided by Avalara through the handouts drop down on the control panel as well to the right-hand side of your screen. So feel free to download either of those documents. But without any further ado, on the next slide, it's my pleasure to bring on Kevin Shakespeare. Hi, Kevin. Great to have you on the panel again. Just to set the scene a little bit, there's a lot to look forward to from today's presentations, but why is today's topic so important, and why should people really be paying attention to what yourself and colleagues are about to be talking about?
Hi, Will. Good morning, everybody, and thank you very much for joining today. And it's a pleasure to be sharing the platform today with Avalara. So a very warm welcome to Avalara as well. I guess the importance of VAT is clearly depends on the type of business you are, whether you're an e-commerce provider, a business-to-business trader, an exporter. But I guess there's potentially a lot of mystique around VAT. But as the colleagues from Avalara will be going through, there's a lot of different nuances that you have to consider, whether that's from the export side and particularly the import side into the European Union. And certainly, as we've seen in the Institute, probably it's amongst our top 3 questions on our technical help desk and the services we provide. We've seen a huge ramp up in VAT questions. So we've had the impacts on the 1st of January, the impacts on the 1st of July, and there's ongoing impacts on businesses. And it's so important because we want businesses and UK exporters to succeed. So to succeed, be competitive in what you do, understand the requirements for VAT, and that's really one of the main reasons that we wanted to present this today. Thank you.
Thanks, Kevin. A lot of practical importance. And but without any further ado, I think it's probably time to get cracking. So over to you, Kevin.
Thanks. Thank you very much indeed, Will. And again, good morning, everyone. So in terms of what we're going to go through today, we're going to look at impacts from exports from GB. I'll be speaking for around about 10 minutes, and imports into the EU. So really, some of this is a summary, but I'm going to pick out some key points. Clearly, there's key points in terms of export customs declarations required for movement of goods, but there's also key points in terms of export safety and security declarations. And that is going to be required as part of a customs declaration from the 1st of October. So it's a key change. It's a key change in both the Chief and CDS platforms. So this is another example of not just the 1st of January, not just the 1st of April, not just the 1st of July, other changes which are coming on stream. This requirement for safety and security declarations to be embedded in the customs declaration as part of it. So another important initiative which we announced to our members a couple of weeks ago in our daily bulletin. There's also the requirements on packaging and labelling around the packaging having to be specially heat treated, and also placing goods on the market, and that clearly depends on the type of goods that you're selling, exporting into the European Union. Whether those goods are animal products, whether they're textiles, manufactured goods, and again, just in July, later in July, we had a EU regulation required that to use the CE mark in the EU, you require an EU representative. Now that's been fairly well flagged up, but the legislation actually came in, I believe, on the 16th of July. So an EU representative required for to utilise the CE mark in the EU. Another change. So as you can see from the slide, we're continually evolving, continually having changes. If we have a next slide, please. So we've looked at exports from GB. Now let's consider imports into the EU, because clearly there's both an export and an import side to the transaction. Yes, again, customs declarations. Yes, entry, safety and security declarations. And also, depending on the goods, import pre-notification may be required. So for the likes of animal products, plants, vegetables, fruits, etc. And you can see requirements on rules of origin, which I'm going to talk about more. So we've got requirements on both sides, and that nicely links into my next slide. So if we have the next slide, please, which refers to Incoterms. Now, Marcella from Avalara is going to talk more about DAP versus DDP later on, and but businesses must understand the Incoterms and the implications they're using, and that also includes the likes of ex-works and free carrier as well, which puts more responsibility and onus on the EU buyer. So be very clear on the Incoterms, because a lot of the responsibilities that I talk about recently from an export and import side are very much down to the Incoterms used. And in GB to EU trade, the majority of Incoterms tend to either be ex-works, free carrier, or more particularly DAP and DDP, which we will be talking about later. So if we have the next slide, please. So again, I want to point out, as I've done many times, that it's more than just a customs declaration. It's more than just paperwork. And I think using the term paperwork undermines the actual importance of a customs declaration and what it means. Goods are leaving the territory of Great Britain and entering, in this instance, the territory of the European Union. So it's if a customs declaration is made by a fast parcel operator, for example, if the goods are going e-commerce or a freight forwarder or a haulier or a customs agent, you're using their services, you need to bear in mind that you are still legally liable for that declaration, not the agent or the organisation making that on your behalf. You must have all your documentation retained for proof of export. And that becomes absolutely key and fundamental, that you have the transport document, the actual evidence of the customs declaration as part of your proof of export, as well as all your commercial documents. You must make sure your commodity code is correct, the country of origin is correct, and the goods are valued correctly for customs purposes as well. So, as I said, it's more than just a customs declaration. You've got to retain all the information and you've got to make sure that information is correct, because it's one thing, obviously, the goods you want to clear customs very quickly so that your buyer can receive the goods and obviously be happy with what you've sent and hopefully reorder more business from you. But you've also got that impact of audit as well, is that customs can technically go back 6 to 7 years to actually audit a customs declaration. So you need to make sure that you're upon audit that you're ready and you have all information and all explanations ready. If we have a next slide, please. So an interesting one and still a relevant issue is supply chain value chains and the relationship to e-commerce businesses. And again, it may vary on this call as to whether you are an e-commerce business or effectively an exporter selling B2B, business to business. So you need to obviously think who you're selling to. Now, clearly that affects the VAT aspects. It affects wider aspects of trade as well. The documentation, as we talked about, is important, but also in the context of origin of the goods. So there is, of course, the EU-UK Trade and Cooperation Agreement, TCA, which indicates that if the goods are of UK origin, that they will enter the European Union free of duty. But you have to demonstrate the origin of the goods. Now, hopefully, in a lot of cases, it will be UK origin. But if you are taking component parts or importing, for example, from China, from Thailand, Taiwan, United States, and so on, you would need to check if you could actually meet those rules of origin. So if you are just a distribution business, it's unlikely to be of UK origin because you're receiving the goods and you're passing them on. If you are undertaking a process, for example, taking raw materials or ingredients and turning them into a finished product, you may meet the rules under sufficient transformation. So there's a number of factors to consider if the goods are not of UK origin. So, and again, a change is coming in at the end of December, is that there is an easement currently, is normally with rules of origin, they're based on importer's knowledge. So the importer in the EU in this instance, knowing those goods are of UK origin. They may require supplier declarations from you, an actual declaration that it is of UK origin, and that declaration has UK legal standing. But there is an easement at the moment in terms of providing that declaration until the 1st of January next year. But that easement ends. It could be, though, your EU buyers are already asking for that declaration. So if you haven't got evidence around the fact it's UK origin, consider. And it's not of UK origin, for example, it has parts from China, as I said, and other countries. Do consider what component parts, what your production process is, and see whether you can declare UK origin. It's quite a complex area, rules of origin, and at the Institute, it's one of our top 3, along with VAT and commodity codes, in terms of the types of inquiries that we get. And if we have a next slide, please. So just some key questions to ask yourself, and these also come into this area of common pitfalls. Do I know the commodity code for my goods? Can I construct it? Do I really know the origin of the goods? Am I quoting the correct customs valuation? There are rules around valuation, customs valuation in world trade. And am I maintaining a full proof of export file? Now, it's easy for me to put down the key questions, a lot more detail behind this, and please feel free to contact the Institute to obtain further information and support. As I've said, it's not just about now. It's very important that the buyer receives the goods. It's customs audit as well, which will take place in months and years to come, that businesses have to be ready for. If we have a next slide, please. So I think the final slide for myself is coming up, and clearly the Institute provide a lot of support for our members with the likes of a technical help desk, and we have seen a 700% increase year on year in the number of inquiries we're receiving, as well as online training courses. Our members get access to lunchtime learning sessions, and we're also providing a range of professional qualifications with education, with apprenticeships, consultancy service helping businesses minimize duty payments and maximize their trade efficiency, including health checks. So that's it for myself. Thank you for listening to me, and I will pass back to William. Thank you.
Thanks, Kevin. Very interesting as usual. So much going on for UK traders right now. So great to get that overview. If you move to the next slide, I believe we have a poll which I'm about to launch. So the first poll we're going to ask of you is how much do you know about the EU VAT reforms? And the options there range from nothing at all, heard about the reforms, aware of some of the changes, to fully understand the changes. While people are answering that poll, Kevin, if I can bring you back on just for a quick question. We've had a few already. We've had a few already on postponed VAT, actually. So we had this question from Jay, who asked, how do you account for postponed VAT on the VAT return?
Okay, well, thank you very much for the question. It's a really important question. So it's first important to recognise that postponed VAT applies for both imports from the EU and from the rest of the world as well. So you will need an online VAT account with the government gateway, and hopefully, if you are VAT registered, of course. And you can only account for VAT in the postponed VAT in the accounting period itself. You'd also need to make sure, if you're making the customs declaration, or if an agent is making your declaration for you, that in the actual declaration itself, that the correct field and code is used to indicate that postponed VAT accounting will be used. Then you effectively go on to your online VAT return, and you complete certain fields, so likes of box 1, box 4, box 8. What I'm going to do, I'm going to try and put in the chat facility a couple of links that you should find useful, which go through the actual requirements when you're doing your VAT return. Thank you.
Thanks, Kevin. That'll be really useful, and I'll make sure that gets to everyone. If yeah, so that's thanks, Kevin. Very good stuff. I'm just going to close that poll and share the results. So this is interesting. Over half of you are aware of at least some of the changes, which is interesting. 26% of you have heard about them, but maybe aren't quite aware of what they mean. 3% of you fully understand the changes, so hopefully today's webinar will reinforce what you're understanding, and then 16% of you, nothing at all is your response. I think that's an interesting cue of which to bring on Matt, who's our next speaker. Matt, any surprises there in terms of the awareness?
No, I think everyone's aware of the changes, but doesn't fully understand some of the things it means to their business. So I'm not surprised by those figures.
Interesting. Great. Well, I'll hide the poll, and without any further ado, I think the next slide is the start of your presentation.
Okay, thank you very much. So I'm going to take you through a couple of different aspects. So firstly, I want to introduce Avalara. So many of you may be aware of us, but as a company, we are headquartered out of Seattle. So if we can go to the next slide, thank you. We're headquartered out of Seattle, but we've got offices all around the world. So a large number across the US, again, Brazil, India, and quite a number in Europe. So we've got a fairly global reach, and you'll see from the next slide some of the things that we look at as a business. So we started operating in 2004. We've now got over 30,000 different customers globally across 79 different countries. But one of the key things I would like to point out is the middle segment there is the partners. So we have a really strong relationship with our partner network, because we know without our partners, our business wouldn't be as strong as it is. So we've got integrations with our platforms. And that is one of the main things we look at for our business. And the last thing on the bottom right corner is a couple of years ago we filed, so in 2019 we filed 2 million returns. So it's just put the aspect of how many returns we're filing on a yearly basis. Okay, so now let's go into some of the changes that has happened. So we're going to go through a couple of different models. So we're going to talk about iOS. We're going to talk about the potential different models you can use shipping into the EU. Then I'm going to talk about the other elements that have changed in part of the e-commerce package. So that's the Unionus and non-Unionus, and then we're just going to finish with indirect representation. So if we just go on to the next slide, we're just going to talk about what IOS is. So IOS is a new simplified reporting model that has been introduced by the European Commission to basically allow businesses to be able to ship and send goods to consumers easier, but also be able to simplify the compliance. So many businesses were previously having to be registered in multiple countries or use different models. They've now tried to invent a new model that businesses can be able to use to simplify it for both the business, the customer, and the logistics company. And so what does that actually mean in practice? So there's something called the green shipping channel. So originally, goods would have to VAT would have to be paid on goods before they were shipped through this model, and so they would have to be paid before they would ship on the other model. Sorry. So what would happen is the goods would arrive at customs, and VAT would either have to be paid by the consumer or paid by the business. And what the new model represents, the green shipping channel, is that those goods are exempt from any VAT being paid because you're charging the customer VAT at the checkout stage. So what that means is the goods will go through customs a lot quicker and allow you for a smoother transition through that process, and likely less rejected goods. And then the next part is obviously the simplified reporting model. So registering for IOS allows you to send goods to consumers to all 27 EU locations, and then all you need to do is register in one country and file one simplified return. And so these transactions relate to any goods that are below, or any consignments, sorry, that are below 150. So if you've got three consignments, if you've got three sets of goods with a consignment value of over 150, it can't be considered under IOS. But if you've got, say, three goods valued at 40 euros each, then that would equal 120 euros and therefore be applicable for the IOS scheme. So it's important to understand that it relates to the consignment value and not the goods value. And the last thing that's changed as part of the e-commerce package is the scrapping of the 22 euro exemption threshold. So everyone would have been aware of the low value consignment. So if you shipped goods previously before 1st of July into the EU that were below 22 euros, there'd be no VAT charge on those goods. And so what the EC has done is they've made the competition fairer, so that the companies that are selling goods inside the EU aren't disadvantaged by that exemption. So it's just make it all clearer and more fairer for everyone involved. So next slide, please. So I mean, many people ask, well, why 150? And so I think it's clear to see from the table that the reason why 150 has been the chosen amount is because when consignments are above 150, both VAT and duty is due. And so it was a clear distinction from the threshold perspective of where they were going to put that level. So now obviously all goods below 150 are going to attract just VAT, and all goods above 150 will attract VAT and duty. Okay, next slide, please. So just talking you through comparing the four different models that you can potentially use. So you've got DAP, DDP. The DDP agent model, it can be referred to by different names, and then the IOS model. So I'm just going to talk about the differences between the different models. So if you imagine the DAP model is where the consumer is required to pay the VAT before the goods enter the country, or before entering officially the European system. And so what that allows for is generally a slower delivery time, because the consumer is going to get a notification to pay the extra VAT. They may reject it, or if they do decide to accept it, what then is going to happen is they'll pay that VAT, and then they'll receive the goods after they've been released. So obviously, from a delivery time perspective, that's not the greatest of models. So the other two models, DDP and DDP agent, what happens is the goods are shipped to customs, and the carrier is going to pay the VAT on their behalf. So in some instances, like in the DDP instance, sorry, they're going to be registered, and in the DDP agent model, the businesses are not going to be registered in the EU. So there's the differences there. So I'm not going to explain IOS here. So what I'm going to do is now I'm going to take you through a more detailed explanation of what IOS is and how it compares with these three models. So if we just go to the next slide. So what does an IOS model look like? So when your customer orders a product, you're required to display the VAT that's been charged at the order finalization process. So this is often considered to be the checkout process. So you're going to have to display to your customers the VAT at that point. What you're then required to do is provide your IOS number, the commodity code that relates to the product, or products, and then the invoice for customs, which is again going to include your IOS number. So we have had businesses already where the invoice has not necessarily met the conditions. So it's really incredibly important. So you make sure that your IOS number is on the customs declaration, but also on the invoice that you're going to send for the customs clearance process. The next element of the stage is the clearance. So obviously import VAT is exempted under the IOS model. So no VAT needs to be paid, which means it's going to have a smoother transition through customs, and often less documentation needs to be completed. And then the next point is that because of the smooth transition, the customer is going to receive the goods without any charges because you've already charged the VAT at the point of sale. So it's obviously great for the customer because they're going to get their goods with a faster delivery speed. And the last thing you'll be required to do under this model is you report and remit the VAT under your monthly IOS return. So if you've got all your July transactions, you're going to file in your August IOS return. Next slide. So let's go through some of the challenges. So obviously selling into the EU. So if you're not currently selling into EU, some of the issues you can potentially face are the increased number of VAT rates. So obviously they don't mirror, so the products don't mirror the same as what they do in the EU countries. So every country has different rates for different products. So if you sell a large range of products, you would just need to make sure that you've got the correct rates for those. The next point is the accurate pricing. So the VAT rates vary so much. So in the lowest country, it's 17%. In the highest country, it's 27%. So obviously, it's a 10% variance. So accurately pricing your products online can be very difficult when you've got a large range of different rates across the EU. And the last point is the commodity code. So obviously, obtaining the correct commodity codes is really, really important. And Marcella's going to take you through some extra stuff for that in her presentation. And the last thing is the new challenge. So the new challenge you face with IOS. So obviously what you need to do is at that order finalization process is provide the VAT amount to the customers. So it depends on whether you have the flexibility to be able to provide that information to the customer. So obviously that's something you need to potentially look at. So that's a potential challenge. But some of the great things to now look at are the benefits. So if we go to the next slide, what do you gain with IOS over some of the different models? So what you've got is obviously expansion into the new market or the extension of the existing market. So the reason I say extension of the existing market is that many businesses that I spoke to decided post-Brexit to turn off countries because it wasn't cost efficient for them to be able to be registered in a country and versus their sales. Now, obviously with IOS, if their products are below 150, they now have that ability to be able to open up into all 27 EU countries. And sell those items to consumers. The next element is obviously the green shipping channel. So obviously that quicker clearance through customs is hopefully going to make sure there's less issues about the VAT and stuff like that. But obviously it's going to also promote a smoother transition through that whole process. So potentially can lead to quicker delivery times. The next is reclaiming VAT on the refunded products. So currently under the DDP model, you have the ability because you're registered in the country, but under the DDP agent model, refunds are incredibly difficult to come by. It's because you're listing the customer as the importer of record, you don't have the ability to reclaim the VAT on those products. And then under the DAP model, the customer's going to pay that out of their own pocket. So if they return the product, they lose that money as well, which again is not going to lead to a great customer experience, which is obviously leading on to the next element. So if you combine a number of these different things, that customer experience is going to be improved by moving to iOS, because you're able to have a smoother refund process, hopefully quicker deliveries, less goods held up at customs. So obviously that better customer experience will hopefully come through when you're using the iOS model. The next thing, obviously, the reduced clearance fees. So some of you may be aware, obviously, when you're shipping goods under the DDP models, you have to pay a clearance or disbursement fee to your carrier. So many of the carriers are now looking at or have already introduced a reduction or completely taking away that clearance or disbursement fee, because they're no longer paying the VAT at customs and clearing those goods in that way. So it's important to know that that's something that is being considered by many carriers. And lastly is the reduction in the reporting requirements. So versus the DDP model, where you're registered in any country you're selling to, you'll then have that reduced reporting requirements, because instead of having to be registered in every country, you only need to be registered in that one singular country. So obviously, as you can see, there's there's many different benefits that businesses can take advantage of once they register for iOS. So we go on to the next slide. So how does this compare? So I've broken this down into what I consider the 4 key elements a business might want to consider when they're looking at the potential model that they would want to do. So if you look at, firstly, if we look at the shipping, so DAP is by far under the slowest way to get goods to a customer, because of that whole having to send a notification to the customer, and then the customer have to paying it before they receive the goods. What that means is that presents often days slower that the customer may receive those goods. The other 3 models are fairly similar, but iOS is by far the quickest, because obviously there's no VAT being paid, so those goods can go through customs quicker. The next element is the cost of the business. So obviously if you're a potential startup, or if you don't want to get involved with any of the custom side, obviously the DAP model, it presents the best from a cost perspective. But there are other things where you'll hear later on where it's not so good from the model's perspective. So obviously the most expensive to implement is the DDP model, because you're going to have the expensive compliance costs that you have to be introducing for registering in all of relevant different locations. But it does give you the ability to reclaim the refunds on products. So reclaiming the refunds on products can be important. So if you've got a higher returns rate, then obviously that reclaiming the refunds on products becomes incredibly important. The DDP agent model, from a cost perspective, there's no additional VAT compliance, so there's no cost there, but obviously you lose a lot of money on the return products. So it depends on your return products and what countries you want to sell to. Depends on which one of those 2 models would potentially win you over. But for me, the iOS, from a cost perspective, gives you the best advantage, because you get to reclaim all the VAT on the refunded products. So those variable costs, if you receive a high amount of returns, you can be happy that you're not going to lose the VAT on that. And also there's the low compliance cost of only having to register in one place. And then from a customer experience perspective, I mean, generally the customer receives a fairly similar experience in DDP agent, DDP and iOS model. It probably is slightly better on iOS, but fairly similar on those. It's just not great of an experience from the customer's perspective on the DAP models, especially if you haven't informed the customer that they're going to have to pay extra charges up front. And obviously there's the VAT on the refunded products. So obviously from a customer experience perspective, if you're looking for a customer experience, a good customer experience, DAP model is probably not the best for you. And again, on the growth aspect, if you're looking at retention of customers, DAP is probably not the best model, because if they don't receive a good customer experience in the first element, it's unlikely they're going to do repeat business with you. It's more likely they're going to go and look for another company that can potentially offer them a much better kind of service where things like tax are included. Okay, next slide. Okay, so a lot of people ask, well, how do I get started? What do I need to do for iOS? So there's a few things that you just need to do to short checklist. So if you're going to register for iOS, find a company that obviously is going to assist you with the registration. And then once you've got that number, you'll be able to provide that to your carrier. So ARS numbers are fairly quick to come by. Most at the moment are coming inside a week. So it's a fairly quick setup process, but obviously just need to make sure you've got all the relevant documentation that business is going to need to be able to register you. Then obviously you've got to set up the VAT calculation at point of sale. So make sure that your website's geared up to be able to show that VAT amount for those customers. Last thing is obviously if you haven't already been selling into the EU post Brexit, then obviously you're going to need to obtain commodity codes for your products, because that's a really incredibly important point that obviously, again, like Marcel is going to take you through later on. And then it's a really simple process monthly. Again, there's only a couple of different elements you need to potentially follow. So you're going to collect that sales data from any of the platforms you're using, and then obviously report that on your IRS return. You then need to make obviously the payment for the IRS transactions, so obviously collecting the VAT that you've collected over the last month, and then making that payment over to the tax office. And the last thing is obviously if you start adding new products to your portfolio, you'll then have to obtain those commodity codes for those new products. So a few different things. So obviously Avalara can help you with all of this sort of stuff. If you're looking at getting involved in IOS, one important point to point out is that many businesses are required to appoint an intermediary. So depending on where your business is based, you may need to appoint an intermediary, which is basically a company that is jointly and severally liable for any of your transactions. So if we go to the next slide. So the next element I would like to just quickly touch upon is the other stages of the e-commerce package. So this is the second element of the e-commerce package. So the Unionus is basically simplifying the distance selling element of the previous rules around the shipping of goods to consumers from when they were based inside the EU. So we've gone through IOS. So IOS is when your goods are located outside the EU and you're shipping to consumers in the EU, so the import one-stop shop. We're now moving to the one-stop shop, which is where your goods are already located in the time of the by the time of sale, already located inside the EU, and then obviously you're then shipping those goods to consumers from that location, whether it be Netherlands, France, Spain. So who can use Unionus? So Unionus is basically available for all businesses, but it's available in different ways for different businesses. So for EU businesses, they're allowed to ship all their goods to consumers under the Unionus. There's also a separate set of services, which I'm going to take you through on the next slide, which are also included in that setup. And for non-EU businesses, Unionus is only related to goods. So what businesses will have to just make sure aware, if you're a non-EU business, you can only use that Unionus for goods, and if you have those other services, you have to register for the non-Unionus, which I'm going to take you through in a second. So what has changed? What has changed from the previous model? So everything's now being taxed at destination. So if you're selling to different locations, you're going to have to make sure you're charging the VAT rate of that location. Whereas previously there was origin-based distance selling thresholds. So they have now been scrapped and replaced with a single threshold. So there's now a single threshold of 10,000 euros. So if your goods are located in Italy, then you've got a 10,000 euro threshold before you have to register for the OS scheme. But obviously, as you know, that's a fairly small threshold, in so many businesses that are obviously selling are registered for OS as well. And so just taking you through again, the last thing about it is the simplified reporting model. So obviously when you're shipping those goods, you can report all of those sales you're making to all the 27 locations under one singular one-stop shop return. So that means that you'll file one return on a quarterly basis, to report all those sales. So really simplified process. The important thing to be aware of is that you do have to have a foreign registration in the country where you have the OS registration to be able to report the purchase transactions, the import transactions, or the acquisitions you're making into that country. Next slide. So non-Unionus, I'm only going to briefly touch upon this, but basically this relates to, this is basically an extension of the original MOS scheme. So originally MOS included just digital services. This includes a large range of services which you can see listed there at the bottom. So those services are services that are now included as part of the non-Unionus. So again, same simplified reporting model on a quarterly basis. Differences here: with the OS, you have to register in the country where you're storing stock. With the non-Unionus, you have the ability to be able to choose the location where you register for that non-Unionus. So just a slight variation in how you potentially need to account for and register, but same model as the Unionus. So you're going to report all your sales from all the different locations inside the EU in your non-Unionus return. So if we just go on to the last element, which is if you just go on to the next slide, with the last element, which is when goods are above 150 and located outside of the EU, there's potential different models that people can face. So obviously, not everyone sells consignments. Not everyone can sell consignments below 150. So if you do have consignments above 150, there are potentially other models that you can use rather than having to potentially store stock. So obviously, one of the simplest ways to pick a location, store that stock, and then you have to never worry about whether it's below or above 150. But if you do want to store your stock, say in the UK, and the goods be above 150, you can obviously use one of the other models, so DAP, DDP, DDPH, and we've gone through all of the pros and cons for those elements. So one potential new model that businesses potentially can use is shipping via a location and registering for us. So if your goods are stored in the UK and your shipping company say their main hub is in the Netherlands, you can ship those goods into the Netherlands, register for a foreign VAT registration in the Netherlands and an OS return, and then make your sales to businesses, to consumers across the EU. And then that way, instead of having to register in loads of different countries, you're then clearing the goods in the Netherlands and then shipping the goods out from that location in the Netherlands. But it can all happen very transitional, rather than the goods having to sit in a warehouse for a long time. They can just go straight from the UK straight to Italy. They would just have to go via the Netherlands to be cleared. So there's elements that you can potentially do as when the goods are above 150 to try and reduce the countries you're shipping to and stuff like that. So we just go on to the last slide that I've got. So one of the key things that as a non-EU business you may have come into contact with over the past sort of 6 months with us obviously leaving the EU and becoming a non-EU country is the fact that we're now outside the EU customs union. And so when you're shipping goods inside the EU, you potentially have to appoint an indirect customs representative. So this only applies when the goods are being shipped on a DDP model and you're the one importing them. So this would be relevant for goods above 150, or if you're sending goods there to sit inside a warehouse. So you may need to consider indirect customs rep. So obviously I've talked there, who does it apply to? So it applies to non-EU businesses. So if you're not part of that EU customs union and you don't have an established EU entity inside the EU, then obviously you're going to need to appoint an indirect customs rep. And how does that practically work? Like you have to have a POA, so a power of attorney between yourself and the customs representative to be able to use their EOI number for your customs declarations. But there's so many benefits to them doing that for you. So they can support you through all the customs declarations. They help the facilitation of any returned products, and they obviously can help you grow your business by providing you a really great service. So looking for a long-term partner with that is also a really, really good thing to do. So one thing I want to point out is that this is also relevant for IOS, but what seems to be happening with IOS is that a lot of the courier companies and shipping companies are becoming the indirect representative themselves for those goods. So it's just clear, just at the moment, it seems to be goods above 150, and when you're shipping large value consignments, say into a warehouse of your for your shipments when they're taking place inside the EU, that's when you're going to need to look for an indirect customs rep. thank you very much.
Great, thanks, Matt. That's really thorough, loads of information there. So I hope everyone has found that useful. I won't take too long. If we move to the next slide, we've got another poll, and I'll ask a couple of questions of Matt very quickly. This question is just asking you what you think the main benefit of IOSS is for your business. Matt, just while people are answering that poll, a question in from Simon, who's asked, is it mandatory to register for IOSS when selling to the EU? And you've also had a flurry of questions of people asking where they can register. So yeah, could you just answer those aspects, please?
Sure, I can answer. It's not mandatory to ship under iOS. So that's why I was showing the four models previously, DDP agent or the DDP model. But with the sort of benefits that you can see that come with iOS, it makes sense to ship under iOS if you do sell a large quantity of those low value shipments. So anything below 150, if you ship a lot of those, then it makes sense to use iOS. So it's not mandatory. So business can introduce it today, tomorrow, next year. But obviously there's great advantages to the business, and the same applies for OS. So OS isn't necessarily mandatory, but if you don't register for OS, then you potentially have to register in every single EU location. So obviously, while it's not mandatory, it is great for a business. It simplifies the requirements and the reporting requirements they would need to make.
Great, thanks, Matt. And in terms of where people can register, is that gov.uk or EU websites? So
at the moment, UK businesses are required to appoint an intermediary to be able to register for iOS. So they would need to contact an intermediary. Avalara is a registered intermediary, so they can contact us and we can help them get registered for iOS. So they can set that up. OS is slightly different. It depends on the in-country locations to what potentially it would need to do in that country. So they may need fiscal rep, they may not need fiscal rep. So it's country dependent for OS, but iOS they need an intermediary, and yeah, the Avalara can provide that service for them.
Perfect, thanks, Matt. That's really useful. Just going to very quickly share the results. I won't linger on these too much, but 40% of you said improved customer experience, 27% efficiency, 22% shipping, and 11% reduced costs. We're hoping to extend the webinar by just a couple of minutes at the end, just so we can fit in a few more questions, and just to make sure that Marcella has plenty of time to do her presentation, which we'll move on to quickly now. So on the next slide, over to you, Marcella.
Thank you, Will. So today obviously we've looked at the changes that have occurred when trading with the EU, but I want to have a look, obviously with the rapid growth of cross-border sales globally, I'd like us to have a look at some of the other international transactions that businesses encounter, and particularly in the e-commerce space. So if we can move to the first slide, please. So just to recap, let's look at the type of transactions that the import one-stop shop is designed for. So it's designed for business to consumer sales, businesses or shipments with a value of under 150 euros, shipments that are going to the 27 EU member states, and transactions where VAT must be collected at point of sale. But if we now look at cross-border sales in general, some of the other considerations include business-to-business sales as well as B2C, shipments of different values, worldwide destinations, shipments that attract duty as well as tax, and shipments that are sent using different Incoterms such as DDP and DAP, which obviously we've touched on already today. So if we can move to the next slide, please. So obviously the process of cross-border, selling cross-border can be complicated. And I often speak to companies that have either just started selling globally or are looking to expand their business globally. And the vast number of them that I speak to are faced with the same kind of challenges. Some of the most common reasons that companies contact Avalara include duties and taxes being difficult to calculate. This has definitely become more prevalent since the introduction of the import one-stop shop, where VAT needs to be calculated at point of sale and collected. Cart abandonment due to unclear costs, shipments being rejected due to unexpected charges, and incorrect HS codes that can cause delays and also higher import costs. So to tackle some of these challenges, I want to start by talking about HS codes, also referred to as commodity codes or tariff codes, just to name a few. So if we could just move to the next slide, please. So what is a HS code? So it's an abbreviation for Harmonized System Code. It's a standardized numerical method of classifying traded products and are used by customs authorities around the world. Their purpose is to accurately calculate customs duty and also to identify if any licenses are needed for a particular product. What you'll notice, each country will have its own unique HS code for the same item. So the first 6 digits are universal, and the last 3 to 6 digits are specific to the country that you're sending the goods to. So it's important that the customs declarations are accurate, and this is where HS codes come in. Problems with declarations can lead to shipments being held up at the border and can result in much higher duty rates than necessary. So I just want to show you now some examples of the different duty rates that can be applied to the same item. So we can move to the next slide, please. So this first example, it shows you how the HS codes can vary from country to country. And as you can see, the first 6 digits remain the same, but the last 3 to 6 digits vary from country to country. And obviously so do the duty rates that each country charges. If we can move to the next slide, please. So the next example, this shows you the different HS codes used for the same item within the same country. If a full and accurate HS code is not used, then customs will automatically charge the highest rate of duty for that category. So in this case, if we were sending this pair of female shoes and the correct HS code wasn't used, then the customer would have been charged 18% duty, which is 7% more than it should have been. So if we can move to the next slide, please. So for businesses that have multiple products, obviously the process of classifying can be really time consuming and also quite complicated to find out accurate HS codes for each country. At Avalara, we've made this process really simple for businesses. We've got an automated system where we use AI technology to accurately classify items. We also have a number of content engineers who will manually check all product lists. So using key words relating to product type, the material of the goods, the product function, and the countries the goods are going to, we can provide our customers with an accurate list of HS codes. So ultimately, this is an efficient way to ensure accuracy when it comes to customs declarations, and can provide peace of mind that compliance is being met and the correct amount of duty is being paid. So can we move to the next slide, please? So now we know the importance of HS codes. Let's look at some of the other Incoterms used when shipping cross-border. So when it comes to e-commerce trade, 2 of the most common ways to send goods is either via DAP, duty at place, sorry, and DDP, which is delivered duty paid. As mentioned earlier, these Incoterms are used to determine who will pay the duties and taxes. So the way goods are shipped can have a massive impact on the customer experience. With DAP, it is the customer's responsibility to deal with the duties and taxes. If duties and taxes are not accurately calculated at point of sale, then this can result in surprise charges for the customer and potentially leaving them unhappy and reducing the chance of repeat business. There is also a higher chance that shipments can be rejected if the charges are higher than expected. If costs are unclear at checkout, this can lead to cart abandonment. And if the customers cannot be contacted to make payment, then the shipment is likely to be returned or destroyed. So we can move to the next slide, please. So now let's look at DDP. So when it comes to e-commerce trade, this method is often seen as the best option for the customer. If this is combined with duties and taxes being calculated and displayed at point of sale, then this will lead to a much better customer experience. This in turn will equal complete transparency on the costs, eliminate any surprise charges, and can reduce the chance of cart abandonment and shipments being rejected. So it means that the customer can look forward to receiving their shipment without worrying about a duty and tax invoice landing on their doorstep. If we can move to the next slide, please. So I'm gonna stop there because I realise that there's a lot of information to take in today. But just to summarise, one of the main aims at Avalara is to make the process of tax compliance simple. It's also to ensure the best possible experience when it comes to cross-border sales. So we have an awful lot of information on our website that we believe will be really useful to you about the topics that we discussed today. So following on from this webinar, we'll be sending out some links to those resources. If you can go to the next slide, please. So yeah, just to finally say, obviously a big thank you for today for listening. And if you would like to arrange a one-to-one call with either myself or Matt to find out more about the solutions that we offer, then please feel free to contact us via email, or we're both on LinkedIn if you want to find us and connect with us that way. That would be great. So thank you, and Will, I'll hand it back over to you.
Thanks, Marcella. Thanks, Matt. Already on to the next slide. So actually, we're going to quickly, as we go into the Q&A, just going to ask this question. If you want to share your contact details with Avalara for further contacts, and bear in mind, we're going to have a shortened Q&A. So if you want answers to your questions, but just any further support on VAT or kind of any of the things which have been discussed in today's webinar, then please do select yes to this opt-in question. But yeah, we'll get cracking with the Q&A just while you're answering that. So Marcella, we had a question in from Louise who's asked, if I use Avalara's duty and tax calculator, can I send my goods as DAP?
Yes is the answer. So I think the main focus, or the main importance really, is to be transparent with your customers and with any costs that are involved. So if somebody goes onto an e-commerce website and they want to buy something, I think that the main thing is obviously just for them to have clarity in terms of how much it's going to cost them in total. So including the shipping, the cost of the goods, and then any duties or taxes that need to be paid. So what we have is we actually have some customers that they use the calculator and they display the duties and tax charges on their website, but they list it under the total, and they just make a note to say that these are going to be the charges that are due on delivery. So it just gives them the heads up.
Great, thanks, Marcella. Well, I'll keep that poll open, by the way, just a couple of minutes, and a reminder, we won't get to loads of questions, so please do use that poll as an opportunity to opt in. Question in from Holly, who's asked, if you can only ship up to 150 euros per month, would you still have to register for VAT in each country? So I guess that's for Matt.
If you can only ship up to 150 per month.
Yeah, 150 euros. Consignment's worth up to 150 euros per month.
Okay, so it's per consignment, so it's not per month. So the businesses have the ability to ship as much as they want under IOS, but it's just that individual consignment to that individual customer needs to be below 150. So I'm not sure if there's maybe the question was slightly different.
No, I think that could be an important clarification. So hopefully that's helped Holly. If you've got follow-up questions about them, please do type it in. We can follow up on that. Question in from Michelle, who's asked, is there a threshold limit to Union OSS, or is there just a limit of 10,000 euros for IOSS?
So IOSS, there is no limit on the amount of sales or anything that they can make. Again, there's just everything needs to be below 150. On the OSS, there's no limits. You can sell goods of 10 euros. You can sell goods of 1,000 euros under the OSS. So that's where obviously the goods are located already inside the EU. So yeah, there's no limits on the value of the sales.
Thanks, Matt. Just going to close that poll now. Matt, if you want to move on to the slide with speaker bios so people can remember who they're talking to. A question for Kevin. This is from Sabir, who's asked, for goods with value more than 150, if using, and you're selling to the Netherlands, could you use a VAT customs warehouse so as to account for VAT after the removal?
Yeah, it's a good question, I guess, on use of warehousing. So we're very conscious, obviously, that there are warehouse keepers that provide services in that regard. So it can be used. There's a number of things to consider. There is obviously the warehouse keeper, ownership of the goods, who actually owns the goods, the actual status of the goods as well. So technically, if goods move into a warehouse, if they move into a customs approved warehouse, for example, in the Netherlands, then import VAT is only payable once the goods leave the customs approved warehouse into free circulation. But who owns that customs warehouse? Is it a valid warehouse keeper? Who owns those goods? Who has rights? You really do need to check the terms and conditions in that regard to make sure that you don't lose ownership of those goods. There are a number of factors to consider. It's certainly feasible, and we are aware that warehouse keepers, and there's some good quality ones, provide those services, but it is quite a technical area. So I hope I've interpreted the question correctly. Thank you.
Thanks, Kevin. And just while we've got you, because I know you have to shoot off in a second, Nigel has asked about shipping goods for exhibitions or events, conferences, where they're not selling them. Presumably that's a case for return goods relief.
Well, there's a sort of couple.
Sorry.
Yeah, as you say, there's a couple of options there if you're sending goods over, let's say, for an exhibition. One is potentially a carnet that can apply, but in some respects you may not see a carnet as appropriate, but an ATA carnet is definitely one of the options. Another one is effectively bring the goods in on a sort of temporary basis with customs approval. So a number of factors to consider there, but probably an ATA carnet is most appropriate unless you're bringing in goods on a temporary basis to serve a purpose. But you must remember, if it's coming on a temporary basis, they can't be sold, and they must be returned in relatively similar conditions. So, for example, if they're going to be used for any manufacturing or to carry goods or things like that, if they're damaged, you may breach the rules.
Thanks, Kevin. We'll do a couple more questions. One from Simon. We've had a few people ask about Northern Ireland. He's asked, do you need a specific EORI number for selling to Northern Ireland? I just wonder, Matt or Marcella, do you have any kind of information around VAT in Northern Ireland? Or Kevin, for that matter.
So yeah, I'm happy to take that. Sorry, if I've understood the question correctly, and apologies if I haven't. If it's the EORI number and you're selling into Northern Ireland, there's obviously quite a few factors to consider there. Clearly, the Incoterms that will apply. If you're selling on if you're a GB trader selling on DDP delivered duty paid terms, then you will require an XI EORI number. So that's different from a GB EORI number, but it's relatively straightforward if you have a GB EORI to obtain an XI EORI. If you're a trader based in Northern Ireland themselves, again, and you're bringing in goods from GB, then that depends on the Incoterms again. So if it's anything other than DDP delivered duty paid, you will need to make the declaration, the inbound declaration, and you require an XI EORI number. There are, however, a number of considerations with Northern Ireland. There is a FPO fast parcel operator easement at the moment, which is due to end on the 1st of October. And also there's considerations about whether the goods are for sale in Northern Ireland or are they going on to the European Union. But again, unique situation for Northern Ireland. It's only import declarations required for Northern Ireland, not the export from GB. Thank you.
Thanks, Kevin. We'll do one last question because we are short on time. Jeff has asked about triangulation, EU to GB triangulation. Does anyone have anything to say on triangulation? Matt, I see you've unmuted.
Yeah, I can handle that one. So with the UK no longer being part of the EU, triangulation cannot be used for goods that are coming from the UK because there's that hard customs border now. That triangulation process can't be used. It still can be used by UK companies, but only for goods that are located. So there would need to be 3 countries involved that are still inside the EU. So it's not that GB companies can't use it, it's just that it doesn't involve goods coming from the UK anymore.
Thanks, Matt. Well, I think if we go into the next slide, we have run over, so I'm just going to wrap up very briefly. You will all be getting a copy of these slides and the recording in the next day or so. You can use the handouts feature in the panel as you leave the webinar, but we hope you found this useful. There's a lot of information, some of it quite technical to take in. And of course, in the slide pack, you'll be shared the contact details of Avalara speakers today as well. So hopefully, if you have any further queries, you know where to go. And of course, the IOE offers plenty of support itself with our technical helpline, training courses, and all the information you can see on the slide there. But I won't keep you any longer. Thank you everyone for attending. Thank you, Kevin, Marcella, and Matthew again for speaking. And we hope you found it useful. See you on the next one. Thanks everyone. Goodbye.
Thank you.